Hi, good evening everyone. Yesterday you guys had paper of economics. Hope everyone paper was so good. So today we are going to do the analysis of your economics paper. Right? So without wasting more time, we quickly start the analysis. So this paper, economics paper, if you can see, there are 32 objectives we are having in this paper, right? Including your MCQ, one word, true, false, match the column, right? So there are 32 MCQ and remaining numbers is of theory. So the total paper is of 80 marks. So let's quickly start with this one word part. Write the answer in one sentence. So first question is write the formula for marginal rate of substitution. So what is marginal rate of substitution? Suppose a quantity of goods which consumer is willing to sacrifice to gain another quantity. So this is the formula for marginal rate of substitution. Changes in x upon changes in y. This is x and y is what? Goods. Right? Suppose I am having, suppose I am a consumer. I am having options to buy one apple and five bananas. Right? Suppose I am buying one apple and five bananas. Now, another option I am having to buy two apple and three bananas. So for one apple, I am getting one apple extra and I am sacrificing two bananas. So this is what marginal rate of substitution. I am sacrificing two bananas to gain one apple. So this is what MRS is known. What a long run cost. Long run are cost in which all the factors are variable in long run. Now, at which point the determination of wages occurs in labor market. So this is very simple. When demand of labor is equal to supply of labor, then that is known as determination of wages occur in labor market. Now, what is the name of institution which issues currencies in India? This everyone knows. RBI, Reserve Bank of India, is the only institute in India which issues the currency. Now, what is balanced budget? Balanced budget is the budget in which expenditure is equal to income or revenue is equal to expenditure, right? So this is known as balanced budget. Quickly we come to MCQs now. Among the competing usage of resources, the main cause of problem of choice in every economy. So main choice of economy, problem of choices occurs when we are having limited resources, right? When problem of choices occurs because human wants are unlimited, right? And resources are limited, right? If suppose you want to go on a party with your friends, you are having $100, right? And you want to buy everything, you need to eat everything there. So what the resource, what is resource in this case? Money, the money you are having. This is limited to you, $100, but you want to buy everything, your want is unlimited. So this occurs because of scarcity of resources. So always remember, problem of the choices is occurs because of scarcity of resources. Higher difference curve shows the level of utility is one of the following: higher level, right? Higher level of indifference curve always shows the higher level of utility. Next, the gain foregone from the second best activity is opportunity cost. Opportunity cost is also known as the opportunity lost, right? Then continuously fall by huge amount in the level of output and employment is an economy is called Great Depression. For the transaction, the most liquid and easiest measure of money is M1. M1 is the most liquid and easiest for transaction. In which of the following years GST are implemented in India? As all of us know, GST implemented in 2017. Now, fill in the blanks. For inferior good, the demand curve shifts rightwards. Suppose this is the demand curve. So for inferior good, it always shifts towards right. And why does this happen? Because in inferior good, if prices increases, so demand of that product also increases. Got it? Price and demand is having direct relationship. So that's why it shifts towards rightwards. Always remember, in other goods, in normal good it shifts leftwards, but in inferior good it shifts rightwards. The profit of a firm is the difference between revenue and expenditure. Second, expenditure would be the answer. In the perfect market, a firm can enter and exit freely. Okay. The situation of excess demand leads to in prices in the long run. The situation of excess demand leads to rise in price, right? If you are having an excess demand of anything, the price would rise. Okay. Now let's quickly solve true and false. On the basis of cardinal utility analysis, the level of utility can be expressed in numbers. Yes, we are having two utility analysis. One is cardinal and ordinal. As per ordinal, we arrange them in order, right? And as per cardinal, we number them. The average fixed cost curve is rectangular hyperbola. Yes, the average fixed cost curve is rectangle hyperbola, and the reason behind that is when the production increases, the average fixed cost keeps decreasing, right? But it can't touch the x-axis. That's why it's called rectangular hyperbola. In a perfectly competitive market, firms are price determinators. False. The remuneration for internship is interest. No. The remuneration for entrepreneur is profit, not interest. The economic exchange without the medium of money are referred to as a barter exchange. Yes, this is true. Higher interest rate inspires firms to higher investment. Yes, this is also. No, this is false. Higher interest rates inspires firms to higher investment. No, this is false. Okay. Okay. Now let's come to match the column. Tea and coffee. As everyone knows, these are the substitute goods. So for first, option C would be answer. Second, fan and electricity. We can't use one of them. We need to use both of them. So these are the complementary goods. Changes in factors. So fourth option, total revenue. So option B would be the answer. Total revenue would be total output into market price. Net indirect taxes would be indirect taxes minus subsidies. The value of MPS is between 0 to 1, right? Which is option D. 6. The price of one currency in terms of another is foreign exchange rate. Option E. Now, we have kept aside changes in factor. Now, option A is the only left, and yes, this is right in short run period. Right, so suppose you are getting confused in any of the options like this now, so you can keep that aside for the last also. Now let's quickly come to theory part, right? How the equilibrium price and quantity affect if the income of consumer increases. See, if income of the consumer increases, so what happened? Suppose income of the consumer are increasing from 50 to 100, right? So demand of the good would be increases, right? If my income has been increased, so demand will automatically increase. I will start spending more. So equilibrium price will shift towards rightwards, right? Or you can say equilibrium price will also increase. Now what is the personal disposable income? See, personal, as name suggests, personal disposable income is income minus direct taxes is known as personal disposable income. What is personal income? Personal income is the income before paying the taxes, right? The income which is before paying the taxes is personal income. The income which is after paying the taxes is PDI. Now what is the meaning of consumption function? Consumption function is the functional relationship between the consumptions. Now question number 9, what is effective demand principle? So effective demand principle would be aggregate supply is equal to aggregate demand, right? The overall supply in market is equal to overall demand in market, which is aggregate supply equals to aggregate demand, is known as effective demand principle. Now next question. How goods and service taxes is better than compared to old taxes system? See, this is better because earlier what we used to have, there are sometimes we need to pay, like the process would be lengthy, we need to pay different taxes, right? So cascading system chances of cascading will happen. Now here there would be no chances of cascading. Second, in this GST we follows the one nation one tax. This is the best policy, which this is the best type of tax. What is the revenue expenditure? Revenue expenditure are those expenditure which firm incurs to manage day-to-day expenses. And capital expenditure are those expenditure from which firm spends to buy some asset. Those expenditure is known as capital expenditure. Now what is law of demand and what is price elasticity of demand? This is also very easy, right? Law of demand is what increase in price leads to decrease in demand, and decrease in price leads to increase in demand. Price and demand is having inverse relationship. This is what law of demand says. Now what is price elasticity of demand? So percentage change in quantity demanded upon percentage change in quantity of price. If you write this formula also, now this is right. Right? Percentage change in quantity demanded upon percentage change in price. What is the production function? Question number 13. Production function is the function in which we are having the functional relationships between the different units of production. Next question, question number 14. What is the relationship between the market price and average revenue of a price taking firm? So, price taking firm, it generally happens in perfect market, right? So, relationship between market price and average revenue. When market price will increase, average revenue will also increase. When market price will down, average revenue will also decrease. What is the price flooring? Flooring generally, this price floor generally, as the name suggests, floor, like the minimum price of anything. Generally this is being set by the government. In this, government set the minimum selling price, which is also known as MSP of any product. So this is known as price flooring. Question number 16. RBI is known as the lender of last resort. Describe this statement in 3 points. Okay, so as all of us know, RBI is what? RBI is Bankers Bank. This is the Central Bank of India. RBI is Central Bank of India, right? So suppose lender of last resort. What does this mean? Suppose when we consumer want a loan, what do we do? Generally we approach to the commercial banks. Commercial bank is what? All the banks, your SBI, Axis, ICICI, HDFC, everything, right? These are the commercial banks. But if sometimes these banks also require a loan, so in that case they need to approach RBI, right? So that's why RBI is also known as Bankers Bank, and that's why RBI is the lender of last resort, right? If commercial banks, private banks, or whatever government bank, if any bank needs a fund, they need to approach RBI. So that's what this is known as. RBI is known as the lender of last resort. Now question number 18. Explain indifference curve with the help of a diagram. So indifference curve, again what I have explained you, how much I am sacrificing now. Suppose I am having a what is indifference curve? First I tell you. Suppose I am having a two options. In when I am buying one apple, and in second I am having 5 bananas, right? Second option I am having 2 apple, 3 bananas. 4 I am having 3 apple, 2 banana. So if I see earlier, what happened? First I am getting extra banana. and I am sacrificing 2 bananas, right? For 1 apple I am sacrificing 2 bananas, right? But later I am sacrificing 1 apple for 1 banana, right? If you see here, I am sacrificing only 1 banana for 1 apple. Earlier I am sacrificing 2 bananas for 1 apple. So this is what indifference curve. If I describe this on indifference curve now, this is what happens, right? Same thing you can describe this on indifference curve, right? Like this you can describe on indifference curve by doing proper marking of y-axis and x-axis, right? And why does this happen? Because earlier I am having a very one apple and five bananas. So utility what I am getting from apple now, that is more as compared to utility what I am getting from bananas. That's why I am ready to sacrifice two bananas. But now I am having two apples and three bananas. Now I feel I am having the same utility. So why would I sacrifice more bananas to get one apple? So that's why the this is the logic behind the indifference curve. Like if you initially what happens if you are having the options of getting two fruits. So initially what consumer does, normal consumer or rational consumer does, he sacrifices more and more food, right, to gain one quantity of other food. But later it keep decreasing. So that is what indifference curve logic says. Question number 19, distinguish between nominal gross domestic product. Okay, this will take time. We will discuss this later. Question number 19. Keep this aside for last. Question number 20. Explain the two merits of fixed exchange rate determination with the help of diagram. So fixed exchange rate is what? Fixed exchange rate in which the exchange rate is being fixed by the government, right? If I need to do any kind of exchange, currency exchange, so that rate is being fixed. So this is very we need to tell the merits. So merits are very easy for this. So first merit would be like there would be a no fluctuatility, right? Their fluctuatility would be very less in this. And if we are doing a business, if fluctuation is very less, so what happen? The risk would be very reduced. Your business become very stable if fluctuation would be reduced. So this reduces the risk of business. This is the first merit. Now second merit of this would be like there would be a very less chances of speculation in any kind of business, right? This reduces the possibility of speculation also, right? Because that is being exchange rate is being fully controlled by and managed by the government. So speculation chances would be negligible in this. So let's solve question number 21. Both the options are very easy of question number 21, but I feel we should, if we know both the options, so we should do the question which is more easier. This is what I feel. So I am going to do the second question which is very easier. Right, here you just need to calculate the market demand. And how we calculate the market demand? We just need to sum up the individual demand, so we get the market demand, right? So let's quickly solve this. Suppose I quickly make this table for you. This is the price, goods or price I am writing here, right? Quantity demanded by firm A, B, C, and this is the market demand. Right, now wheat is demanded by 10 by A, 20 by B and C 08. Rice 5, 15, 20 and sugar. Right, so it would be market. We just need to do the sum up, guys. We just need to 10 plus 20 plus 8. Basic maths you need to do here, nothing, and this would be your answer. I'm not doing any scientific maths, any standard maths, right? This is a very basic maths I'm applying. 5 plus 15, 20, 40. 2 size. If you have done this calculation correctly, now I'm repeating. So you have scored 4 numbers. Just these 3 sum up you need to do. So this is what question number 21. Now let's discuss question number 23. Describe the effect of change in aggregate demand on income in any 4 points. So you need to find the effect of aggregate demand. So first we understand what is aggregate demand. Aggregate demand, as we have discussed, Aggregate demand, the demand which is being asked by all the individuals. Here what we have done, market demand. This is similar to aggregate demand, right? The demand, if you sum up of all the individual demands, now you get aggregate demand. So, okay. So if aggregate demand, first I tell you, we need to explain this in 4 points and we are having 4 marks, right? This question is of 4 marks. So in detailed discussion we are doing in detail. So first, when aggregate demand increases. So if aggregate demand increases, what happens? If demand increases, definitely firms need to increase their production, right? If they need to increase their production, what happen? They need to generate more employment, right? So employment would be increased. Income, if employment would be increased, this is a very good thing for any nation. GDP would be increased, production would be increased, so income would be increased, right? So this you can elaborate in 2-3 points, like employment would be increased, firms production would increase, raw materials production will increase, everything would be increased, our GDP would be increased, there would be more employment, there would be more earning, right? Now this you can describe in 2-3 points. Now second, they are asking describe the effect of change. So you can tell first when demand is being increased, and now second when demand is being decreased. Now suppose aggregate demand is being decreased by all the firms, right? So what happen? If demand is being decreased, automatically you need to decrease your production, right? If you don't decrease your production, your capital will stuck, right? Your stock in hand will increase. So this is a very you can say critical situation for any economy. So when demand would be decreased, aggregate demand would be decreased, so firm needs to reduce their production, right? If they need to reduce their production, they need to lay out their labor, right? So what happen? Again, there would be unemployment increases, right? So unemployment is not a good for any economy, so GDP would be decreases. If GDP decreases, income would be decreases, right? Then if production is less, firm will not effectively and efficiently utilize their resources, so their profit margin will also reduced. Got it? So this is what you can write in question number 23. Now we skipped the question number 22. Let's discuss this. Long run average cost curve, explain two reason why does it look so. Okay, so first we draw the long run average cost curve. Let me erase this. Both the case questions of question number 22 are easy. In both the case you need to do a U diagram, but as I already told you, we always choose the question which is easier, so I am choosing the question number 22. This is very easy, right? Second option. So the graph for this all labeling you will do. I know everyone knows this, y-axis, x-axis, everyone needs to do this proper labeling. By drawing long run average cost curve, explain any two reason. So average long run, it would be U-shaped, right? Long run average cost curve, yes. This would be long run average cost curve would be U-shaped. I tell you the reason also why. First, what happened in initial phase, the phase where average cost curve keep decreasing. This is the first phase, right? Why it keep decreasing? In this phase, what happened? All the resources are effectively and efficiently utilized. Generally fixed resources if we talk about. Suppose for an example, I'm having a chocolate factory, right? Now in a factory I produces 10 boxes of a chocolate on daily basis, right? But the production capacity of a factory is of 50 boxes, right? So what I need to pay the same amount of rent on 10 boxes and 50 boxes, right? So average fixed cost would be decreased if I increase my production. So this is that phase in which all the fixed factors are being efficiently utilized. Got it? So that's why it keep decreasing. Average fixed cost keep decreasing. This is the reason. Average fixed cost is decreasing. Suppose, just for an example, I am paying 500 rupees rent for that chocolate factory, right? So on 10 boxes I pay 50 rupees per box. But if I produce 20 box, I pay 25 rupees. If I produce 50 box, I pay 10 rupees fixed cost per box. So this is what fixed cost keep decreasing. So this is the reason average fixed cost keep decreasing. Right, then it reaches here, bottom. This is the situation when I fully utilized all the resources effectively. Right, this is that situation. When I utilized all these resources effectively and efficiently in that factory, I produce 50 boxes. Right, now this is the phase when my fixed costs keep increasing. Now why this happens? Suppose I need to produce a 60 box. Now I can't produce more than 50 box in that particular factory. So for that, what I need to do, I need to take new factory, or I need to do some expansion in that. So what happen? I need to hire new labor. Labor is also a major cost in any factory, right? So I need to set up either new factory, or I need to expand the existing one, or I need to hire labor. Everything I need to do, in which I need to spend money. So this is the phase, second phase, in which the fixed cost becomes reaches to the minimum point. Now this third phase, in which fixed costs keep increasing. Right, this is the third phase in which fixed costs keep increasing. So that's why average fixed cost curve in long run is in U-shaped. This is what I have explained to you. Right, in exam definitely you need to give some example what I have given you in the form of chocolate factory or anything. Right, the more example you can write, it would be very easy for teacher to check and understand what exactly you want to explain. So it gives you a good opportunity. Now I think more or less we have discussed whole paper. Right, hope everyone will score a good marks. Thank you.